Hello everyone, today I'm going to share my views on Disney stock. In this video, I will be discussing on what investors can expect from Disney in 2022. Its stock did not have a magical 2021, but will it have a magical year in 2022? Watch on to find out more. But before I dive into the details, hope you can give this video a support by tapping on the like button. I will really appreciate the likes. Okay, here's a quick recap of what happened. In 2020, when the pandemic struck, Disney was forced to close its theme parks and resorts for a period of time and had to delay the release of blockbuster movies such as Mulan. However, Disney Plus, which was introduced in 2019, rapidly gained subscribers since its launch, especially in 2020 when most of us were trapped at home. Surprisingly, the stock went up around 25% in this particular year, which obviously was carried by Disney Plus. Then came 2021, when it looked like some of that confidence in the stock was premature. The growth for Disney Plus went down as competition in the streaming space went up. What didn't help was that the other segments of the company business were not bouncing back due to the prolonged pandemic, as theme parks were functioning at limited capacity growth. The blistering growth that its streaming service Disney Plus experienced early in the pandemic has also faded. As a result, Disney stock was down by about 15% in 2021. Alright, so now we are in 2022, a year which Bank of America believes that Disney remains well positioned for the recovery driven by continued increase in capacity at theme parks and its improving content slate, which I do agree. Let's break them down and elaborate further. First up, let's talk about Disney Plus. The streaming service was a key revenue driver during the pandemic, as people were stuck at home due to COVID restrictions, resulting to a surge in demand for in-home entertainment. Disney Plus subscriber growth could pick up in 2022 as the upcoming content slate looks pretty solid. Some of the expected releases are She-Hulk, Ms. Marvel, The Ice Age Adventures of Buck Wild, and many more. The news that investors focused on in Disney's recent quarterly report in November 2021 was the slowdown in its Disney Plus subscriber growth. But the CEO said they are confident that the company is on the right trajectory to achieve their target of reaching between 230 and 260 million paid Disney Plus subscribers globally by the end of the year 2024, and with Disney Plus achieving profitability that same year. There are many reasons to believe his words, as Disney Plus isn't even available to most of the world right now. It's slowing down in its current markets, but it has many more to conquer. For context, Disney Plus was launched in 60 countries in its first 2 years and plans to launch in 50 more in 2022, and then it expects to be in 160 countries by 2023. This shows that there is still a lot of runway for Disney Plus subscriber growth. Another catalyst to highlight, revenue prospects for Disney from theaters also look bright. The global box office is expected to rebound strongly in 2022, an estimate of more than 50% increase from last year. For those who are not aware, the Walt Disney Company actually acquired Marvel Entertainment for $4 billion some time ago. So yeah, there are several blockbusters coming up in 2022, such as Doctor Strange in the Multiverse of Madness, Thor: Love and Thunder, and Black Panther: Wakanda Forever. With all the focus on Disney Plus in the last 2 years, it seems that many of us have forgotten about Disney's legacy businesses, just like we have forgotten how traveling to other countries is like. The company relies heavily on travel, tourism, entertainment in the past, and 2022 should continue to mark a rebound for these segments, which are currently performing below pre-pandemic levels. Several catalysts that are expected to boost revenue at the parks are the gradual return of international visitors and the recent approval of COVID-19 vaccine for kids. All in all, Disney's theme parks are slowly opening up and regaining momentum. I feel once normalcy resumes, these segments could be more profitable than ever due to pent-up demand. I mean, everyone's dying to travel to visit these theme parks, isn't it? The twist to the potential magical year, of course, is the rapid spread of the highly contagious Omicron variant. In fact, this variant and any other potential new variant is the X factor. But early data shows that Omicron is less severe than prior strains, and hopefully this will be the same for any other potential new variants. To be honest, we are not out of the woods yet. The COVID situation is still quite fluid. An extended outbreak of Omicron or any other variant would impact the recovery of Disney's theme parks. But who knows, perhaps the latest highly infectious yet not so deadly Omicron could help the world achieve herd immunity. Another challenge that I see is Disney really has to grow its streaming business while managing the decline in its traditional media empire. Moving on to a short technical analysis, the stock was previously holding at support level of about $167, indicated by the blue line, plus minus a little bit. Then it gapped down and fell to 150s range after its earning report in November 2021, filling the gaps indicated by gap 1. Currently, it is on a short-term upward trend at 150s range, indicated by the green line, and it can be a sign that it's starting to reverse. This area of 150s range can be the first entry point. However, as highlighted earlier in this video, there are some potential downsides. So for investors who want to play it even safer, you may continue entering at the second gap area indicated by gap 2 on the chart, which is in the 130s range. Alright, my thoughts are nothing much about the company has changed. It's the environment that changed, and I thought Disney is adapting quite well. In fact, they have proven their ability to adapt in a hurry. I mean, the pandemic could have easily undone Disney's success as their main business lines, such as theme parks, cruises, etc., were not in operation for some time. But the entertainment giant found great success with its Disney Plus streaming service, though some may argue that luck plays a part in it as they launched it right before the pandemic. So, will 2022 be a magical year for Disney and its stock? Like timing the market, predicting stock gains for the upcoming year is nearly impossible. But I believe the company will benefit from reopening of theme parks and countries as pent-up demand is unleashed, as well as from the solid content that is lining up for Disney Plus this year. Don't forget, Disney Plus is also emerging as the strongest competitor to Netflix. I am of the view that Disney stock may be down at this point, but it would be a mistake to rule it out. Disney's brand is unmatched and its franchises are unparalleled. Their content is amazing. I mean, who will think of a story where a prince finds a random corpse in the woods and kisses it, right? Come, I clap for you. Enough said. Anyway, for investors who believe in the company's fundamentals, the recent stock dip should be viewed as a good buying opportunity for those looking to hold for 2022 and beyond. For those who bought it at its all-time high, should not let the stock go yet. Don't let it go. But if you're wary about the downsides that I've shared in this video, yet still want to have a hand in this stock, you can also choose to observe how the COVID situation panned out in first quarter 2022 and how the media giant fares now that its theme parks, cruises, and movie theaters are slowly back in action. From there, you can consider opening a small position. Alternatively, if you want to invest in other safer stocks, you can check out my other video on 5 safe stocks for beginners. Alright, that's all for today. What are your thoughts on Disney stock? Do you think this year will be a magical year for them? Let me know in the comments section below. Lastly, thanks for watching my video. Hope you can like, share and subscribe to my channel to show a little support. Thank you.